call the joint quarterly meeting to order. Can we get a roll call for each board?
Nick Curry.
Here.
Georgette Dumont. Christine Hoffman.
Here.
Brandon Maresma.
Sorry.
Here.
Oh, Georgette, you're here. Okay. I'm sorry, Brandon Maresma.
Here.
Eddie Vergara.
Here.
David Cohill.
Here.
Marvin Dupree.
Here.
John Galarno. John Gostilla. Jason Sharp.
Here.
Gaylord Candler.
Here.
Ed Dawson.
Here.
John McDaniel. Dennis Pavlovsky.
Here.
And Debbie White.
Here.
Great. So we have a quorum for all three boards.
Yes.
Great. And just a reminder to please mute your phone when you are not speaking, or mute your computer when you're not speaking. Can't believe we still have to give that reminder at this point in Zoom life, but we do. And it's time for courtesy of the Florida visitors. Do we have anybody on the Zoom or on the phone that would like to speak? I'm going to assume that means no. And old business, we have consideration by all three boards of our minutes. Can I get a motion to approve the minutes of the joint quarterly meeting held August 12th, 2020? Is
Motion to approve.
there a second?
Speaking of rocket leverage, making the right financial decision.
Second.
I didn't see who made the motion. The second was by Sharp. All in favor, please signify by saying aye.
Aye. Aye.
Aye.
Aye.
Aye.
Aye.
Any opposed? Motion carries. Next up, we have consideration by the General Employees Board of Trustees, the applications for retirement. Can I get a motion that we approve the retirement of David Bishop, Utility Plant Supervisor, Public Works / Water Plant, backdrop work requirement effective 3/1/2018, separation date 2/5/2021, meets age, service requirements for backdrop, service retirement 29 years and 1 month of service. Can I get a motion from a member of the General Employees Board, please?
Make it through.
It stops right there, and I don't want to snap it through there. So you'll just kind of pull on it or push one of the two.
Somebody needs to mute their phone. Who made the motion?
I'll make a motion.
Motion by Mr. Mott. Who's seconding? Can you guys just say your name when you make a motion or second? How about that? Who was seconding?
Nick Curry seconds.
Thank you, Nick. Roll call vote for the General Employees Board.
Nick Curry.
Yes.
Georgette Dumont.
Yes.
Christine Hoffman.
Yes.
Brandon Maresma.
Yes.
Eddie Vergara.
Yes.
Okay, application for retirement carries. The next one, this one is to approve the retirement of William Bill Mann, Director of Planning and Development. Retirement effective 2/1/2021, separation date 1/8/2021, meets age and service requirements for normal retirement, 26 years, 5 months of service. Can I get a motion from the General Employee Board?
Dumont, motion.
Second, Curry.
Thank you. Any discussion? Roll call vote, please.
Nick Curry.
Yes.
Georgette Dumont.
Yes.
Christine Hoffman.
Yes.
Brandon Maresma.
Yes.
Eddie Vergara.
Yes.
All right, motion carries. And now consideration for police and firefighters, consultant report presentation by GRS Consulting. Take it away, Brad.
Okay, I'm unmuted. Hopefully everybody can hear this. Thank you. Um, the first document that you see before you is specific to the police officers' retirement system. We received a document on August 27th from the city manager with respect to the existence of a mutual consent agreement between the city of Jacksonville Beach and the Fraternal Order of Police Lodge 17, which I'll refer to as FOP, with respect to the disposition of the use of the Chapter 185 premium tax revenues received by the city for purposes of funding the police officers' retirement system. So Chapter 185 are contributions from the state. Specifically, there was a collective bargaining agreement with the FOP. Section 29.1 was basically from the point of the agreement. This would be the most recent concluding contract. So 2017, 18, and 19. I'm sorry. It bridges years. It was effective through September 30th, 2020, and it referred to in section 29.1, all premium tax revenues received will be used to offset the city's pension contributions, and all accumulated excess premium tax revenues as of October 1, 2016. So prior accumulations through 2016 would also be used to offset city contributions. These have been set aside in reserve. So essentially what the revisions in the report just have to do with an allocation to make it clear that these are available to the city for the purposes of offsetting future contribution requirements to the police officers' retirement system. So if you look at the bullets at the bottom, no changes were necessary to previously received or calculated city contribution requirements. Secondly, previously reserved and unallocated excess premium tax revenues were allocated entirely to the city per the collective bargaining agreement and added to an existing prepaid employer reserve. The new reserve was added to a report on page A-2A. The prepaid employer reserve now totals $178,601 in the report. It's actually larger because of the Chapter 185 money received in August. Excuse me, it was received in late September of 2020. And so that reserve is actually over $200,000 as of the September 30, 2020 valuation date, but we're talking about September 30, 2019 at this point. So the revisions led to a reserve of $178,601 to reiterate that number. And the prepaid employer reserve is a lot like a savings account for the city. And it's also effective when Chapter 185 or 175 receipts go down in a particular period. We experienced that in a big way with the firefighters' retirement system over the last 5 years. There was a lot of Chapter 175 contributions that were less than the prior year. Police favorably have been receiving more money on average over the last 2 years at least. But having a reserve means that when you receive the Chapter 185 money late in the fiscal year, and as was the case this fiscal year, It's announced in August, so we would know what the amount is. But it won't require any sort of adjustments on the part of the city to the extent that the reserve is there to take care of any shortfall with regard to Chapter 185. Are there any questions? There's actually a page 2, which is just the signature. So, I mean, this is really the entirety of the letter for the police officers. But with respect to allocating the money entirely to the city, it's our opinion that it requires the board to adopt the report with the revisions so that it effectively confirms that the retirement board's understanding is the same as our understanding in conjunction with the collective bargaining agreement.
Brett, I have a question. This is Marvin Dupree.
Sure.
Is that number 178,601 buried in one of those numbers on page A2? A2A?
Let me see here. I can't share my screen, but
one of your bullet points says a new schedule was added to the report, and it's A2A. But that prepaid money's not included in any of that state money, though, right?
The source is the state money. Just a moment. I need to
look at A2A. Look at page A2A.
I'm pulling it up now.
I'm wondering if the 178,601 is buried in one of those numbers.
There's the A2A.
Yeah, thanks. So the 153,481, the difference between that and the 178,601, that's a great question. I should have been pointing this out. There was a pre-existing prepaid employer reserve. The police officers, if you look at the original report, unfortunately, it's the prior report and it's on page A15. But A15 had a prepaid employer reserve of $25,120. That was city money. So that was not the source of that money. Was the city making contributions above the amount required over subsequent fiscal years. So they had contributed $25,120 above what they needed to, based on prior contribution requirements. So that was accumulated city money that was in a prepaid employer reserve. And now with the application of the collective bargaining agreement, the 153,481 that you see in item 7 on this page is added to 25,120. And if you add those up, that's how you get the 178,601. So 25,000 was city money and 153,481 was state money.
All right, thanks.
This is a great question. So thanks for asking that and allowing me to clarify.
Are there any other questions from the police board?
No questions. Motion to approve Cohill.
Thank you. Sorry, I got distracted trying to get back to my agenda. Is there a second?
Dupree seconds.
Thank you. Roll call vote, please.
David Cohill,
Yes.
Marvin Dupree,
Yes.
Jason Sharp.
Yes.
Dustin, that agenda item was under a header of police officers and firefighters. Just want to confirm that there is not firefighter action at this time.
The next thing up is firefighters. This next letter is to the firefighters. He was just breaking it down. His letters were broken into police
Gotcha.
and then fire.
Okay.
So he's about to speak about fire.
Carry on.
So there's a band, Fun, F-U-N, believe it or not. And they one of their hit songs was Carry On. I like lyrics a lot. But so the firefighters is pretty similar. So I'm going to move through this a little bit quicker. But in this case, we were notified by the deputy city manager, also known as Karen Nelson. And there was a similar reference in the collective bargaining agreement with the International Association of Firefighters Local 2622. Now, when we were talking about the police officers, their trend for Chapter 185 contributions from the state has been upward. Conversely, for firefighters, it's been downward. So 9.12 of their collective bargaining agreement really hasn't caused any additional money to become available for city funding. The Chapter 175 money has been going down year over year, but there was an excess amount in 2016. And that amount of $27,608. And we need to be very specific. So bear in mind that the firefighters are now employed by the city of Jacksonville. So this report covers former city of Jacksonville Beach firefighters. And at this point in time, not as of September 30th, 2019, there were still firefighters for the city of Jacksonville Beach, but the local employer, it's essential that we be very clear and distinct about where that $27,608 is allocated. It's allocated to the city of Jacksonville Beach prepaid contribution reserve. And every time we wrote that, I made certain that it refers to the entirety of the title. It's not just a city prepaid contribution reserve. It's City of Jacksonville Beach prepaid contribution reserve. Their contributions are primarily fixed at this point. So they don't have to worry about future Chapter 175 receipts being less than expected. Their commitment is pretty much set in an amortization schedule as of the October 1st, 2019 actuarial valuation report. So at such point in time, whether it be this fiscal year or partially this fiscal year and partially in a future fiscal year, that's the city's choice, but it's available should the city want to take advantage as of September 30th, 2019. I'm sorry, as of this fiscal year 21 that we're in. And speaking of the firefighters, I actually was in touch with the internal auditor, Rosalind Jackson, and she sent me, this is irrelevant to the revision, so I'll be real quick. She sent me all sorts of schedules that appear for the first time with respect to reconciliations for the close of the first fiscal year, for which we had two local employers, both the city of Jacksonville Beach and the city of Jacksonville. And based on my review, everything looks to be in good shape. And that information will be shared because in particular, there's a reconciliation with respect to the expectation of what the remaining members are going to contribute. And that reconciliation becomes a contribution requirement to the city of Jacksonville in a subsequent fiscal year. So I was happy to receive the information and glad that everything is very, very well detailed. I think it's very transparent, and I think it will provide a good roadmap for contributions going forward for the firefighters retirement system. So it's those are all my comments. Does anyone on the board have specific questions with respect to the firefighters?
If there are no questions, can we get a motion from the firefighter board to approve the October 1, 2019 69th annual actuarial valuation revisions?
Motion to approve, Pawlowski.
Is there a second?
Candler, second.
Thank you. Any discussion? Roll call vote, please.
Gaylord Candler,
Approve.
Ed Dawson,
Yes.
Dennis Pawlowski,
Yes.
Debbie White.
Yes.
Motion carries. Anything else, Brad?
No, I appreciate working with y'all. I hope everybody's healthy mentally and physically and spiritually.
Thank you. All right, now we have Enco Consulting's Brendan Vavrica, and we had a very exciting milestone, I think, over this past quarter. I don't know if we're still there, but crossing 100 million is pretty impressive. So take it away, Brendan.
Well, very good. Thank you for the introduction. Good to see everybody virtually. Hope everybody's doing well. I'll try to move through fairly quickly, but there is a fair amount of good news here, so I want to make sure we touch on that. If we flip to page number 2, well, actually page number 1, excuse me, the kind of the market review. Generally speaking, obviously, the markets continued to cooperate as we recovered from those February and March lows. Really, there was a lack of news. Certainly in the first quarter back in March, the Fed was very active, reducing interest rates, employing liquidity programs to kind of get the markets moving. Certainly the federal government came out with different stimulus packages. So there was a lot of activity that was kind of helping, right the ship, so to speak, and get markets moving higher. In the quarter from July 1st through September 30th, there was really a lack of news or a lack of new things happening other than the Fed, as they continue to provide remarks throughout the year, had stated that, obviously they had taken a bunch of corrective action to make sure that the markets had all the liquidity that they need, but also stating that if they needed to, they would do more if the market kind of showed that was necessary, or the economy showed that was necessary. And so I think that's a very kind of important backdrop, that even though there wasn't a whole lot of news, with the backdrop of the Fed being supportive and saying they will do more if necessary, it really provided a kind of a positive backdrop or tailwind for equity markets to continue to recover in the face of certainly some more difficult news, obviously with COVID cases increasing and certain problems related to that the market was able to mostly shrug that off. So you can see here in the upper right-hand corner, the S&P 500 was up 8.9% for the quarter. The international markets, as measured by the ACWI ex-US, which is that top line in red, was up 6.3. Small cap stocks also did well, but not nearly as well as large cap. They were up 4.9% as measured by the Russell 2000. And then lastly, down in the bottom section there, we've got fixed income. That was up 60 basis points, or 0.6%. Typically, when equities are up this strongly, you'll often see negative fixed income numbers, but certainly that's a positive. Really, most of the major asset classes that you're invested in were positive for the quarter. If you scroll down to the next page, page 3, this is something we've talked about at length in the past, but it really has continued. The difference between growth and value, as represented by the red bars, which are growth stocks, versus blue bars in value. Certainly, you can see the difference in the quarter, but it's really amazing over the last 12 months in the bottom right-hand corner. I'll give you the numbers for the Russell 1000 value of -5% versus the 1000 growth of positive 37.5. Obviously, a huge divergence between those two particular parts of the market. Obviously, you've got your Wells portfolio, which is that large cap growth. That's obviously been doing very well, being in that particular area. Conversely, JP Morgan value has struggled. So they've been playing in that value pool, which has had more muted returns. If you move on to the next page, we just kind of touch on fixed income. I'm really going to skip over this because, like I said about the economic news, really nothing happened in the bond market. You can see that the green line in the bottom right-hand corner really is on top of the orange line, which is on top of the red line from the prior few quarters. So since all of the activity in the first quarter, the bond market has been quite stable and calm, which is, generally speaking, good news. If you move ahead to the next page, we kind of start to get into the asset allocation. Excuse me, this is the growth chart, what Chris was very nice to tee up for us. So you can see there on the far right-hand side, we really spiked back up. So obviously had that big decline in the early part of the year, but stabilized and recovered very nicely. So as of the end of the fiscal year, little over $101 million. So that's obviously a very nice recovery. In addition, we're well above that red line, which is sort of the hypothetical assumed rate of return. So you can see you're outperforming that. And then lastly, the other thing to note is the blue lines down at the bottom, that represents your net investment. A number of years ago, the plans collectively became cash flow negative. And you can see, as compared to 1987, you've actually paid out $27 million more than you had in back in 87 after you factor in or net out all of any inflows. So definitely in a cash flow negative situation, yet at the same time, you've been able to continue to grow the assets, and that's exactly the relationship you want to see. You're able to keep growing your assets above and beyond any cash flow needs that the portfolio has. So again, that's a very positive looking chart. If you move to the next page, we get into the asset allocation of the plan. Again, you can see those same numbers, the $101.1 million, and it's broken up by investment manager. And then on the next page, it shows it relative to our target weights. So this is where we would look to compare against the investment policy. So Dustin, if you wouldn't mind moving to the next page, page number 6, we can see that as we closed out the end of the quarter, because of the relative performance, we were slightly overweight in equity, slightly underweight in fixed income. Unfortunately, a day like today, asset prices are down quite a bit, so sort of the rebalancing aspect is being handled for us. But again, relative to the overall allocation and relative to our targets, the allocation looks very good. If you flip to the next page, I believe we start on the returns. And here's again where the news is quite good. So for the quarter, we were up 5.7%. That beat the policy of 5.5, and you placed in the 42nd percentile. You certainly were in the upper half of the public funds around the country. The most important number on the page, the one Brad's going to be looking at, the second column, the fiscal year to date, 10.33 gross or 10.1% net of fees. That is behind the policy, which was up 11, just short of 12%, but you still placed in the 43rd percentile. So relative to our assumed rate of return, wound up being a very excellent year. When we were talking back in May, and we were looking at those March 31 numbers, you were looking at a negative 8.5% on your fiscal year with 6 months to go. So what I was kind of mentioning to everybody is, in that conversation, if we had said, hey, I know we're negative 8.5 right now, but if we can get back to double digits by the end of the year, would you take it? I'm guessing most of you would have said yes. So hopefully you can kind of appreciate that very strong recovery of the portfolio and ultimately quite a nice fiscal year. As you take it out longer term, you'll see 5 years, 9.4%, placing in the 19th percentile against the public fund universe. So again, quite a good result. As you move down the page, you'll see the individual components. Vanguard did exactly what it's supposed to. Wells Cap was a little bit behind, 11.8 versus 13.2 for the year, 32% versus 37%. So that's one of the contributors to our total fund being a little bit behind. JP Morgan, the relatively new large cap value fund, did very nicely. It was up 6.8 versus 5.6. And for the last 12 months, it is negative, down 1.8, but the benchmark was down over 5%. So on a relative basis, they're doing very, very nicely over that period. Eaton Vance, your Atlanta mid cap portfolio, underperformed again this quarter, 3.2 versus 5.8. And for the last year, now negative 4.8 versus a positive 2. So again, one of the other contributing factors to the total fund being behind. Although you will notice when you take this fund out over 3, 5, or 7 years, it has done incredibly well for you over time. But certainly these last couple of quarters, the performance has been a little bit softer. And then moving over to page 8, we get into your international equity portfolios, which both did very, very well. Euro-Pacific growth, 9.6 versus 6.3. And for the year, 15% versus 3.5. So fantastic, both absolute and relative performance. And then WCM actually even better, 8.7 versus 6.3. And for the year, 24.5 versus 3.5. So really getting some fantastic returns out of your international portfolio. As we leave the equity markets, we get into fixed income with Sawgrass, 107 versus the 39, and for the year, 7.8 versus 7.08. So again, relative outperformance, and Sawgrass is doing well. Here we have PIMCO Diversified. This is your global bond. As you remember, last quarter, we swapped from the Templeton Fund. So you can see just a limited amount of information, only 1 month there. And then the last piece down at the bottom is the real estate portfolio with JP Morgan. They were essentially flat for the quarter, slightly behind the benchmark of 57 basis points, essentially in line for the year, 1.7%. Certainly, we've seen some softness in real estate as the COVID-19 has certainly slowed up real estate transactions and obviously affected the retail markets. We talked about that previously, but you're seeing some of that softness. But again, we're starting to see signs of the kind of the real estate market picking back up, and I'd expect to see a bit more transactional activity and some additional comps kind of start to improve, after the lull we had earlier in the spring. I'm going to stop there for a moment and see if you have any questions or comments on anything that I've covered so far. Okay, so I think at the next page, I think we actually get into the fee schedule. Perfect. Before I get here, I just wanted to mention an update. So obviously the markets are soft today, but as of this morning, the total fund was up to $102.5 million, which is an increase of about 1.3%. So through the 27th of October, our new fiscal year was off to a fairly reasonable start and even higher from that $101 million balance that we saw here as of September 30th. So that really concludes everything that I wanted to mention in the actual report itself, but I wanted to take you to this fee page, one, to remind you just obviously what you're paying all of your different investment managers, but two, also to make you aware of something that's happened in the index fund part of the market. So we utilize the Vanguard Total Stock Market Fund, which you can see on the top line here. And you have about, call it $15 million in that account, and you pay 4 basis points. Now, Vanguard for a long time has been the industry leader in terms of providing low-cost index funds. Recently, Fidelity, who's had index funds for a long time but have not been as competitive in terms of pricing, has lowered the prices of their mutual funds to half that of the Vanguard funds. And so what I wanted to bring to your attention is there is now a Fidelity total stock market fund that's available for 2 basis points. So you can see, you're paying roughly $6,000 a year for your index exposure with Vanguard. If we were to swap that for the Fidelity fund, the plan could save roughly $3,000 on an annualized basis for essentially the same exposure, just at a lower cost. And so in the agenda, that's listed as a recommendation. Again, we view index exposure where, really the fee is the differentiating factor. And now that Fidelity has this fund available, we thought it made sense for the plan to save those dollars. So again, I'll kind of open it up to questions based on that suggestion. But that's something that I wanted to make sure you had in front of you.
So does anybody have any questions on the quarterly report or the recommendation to switch our index fund?
Yeah, just one. This is George Candler. On the recommendation, Brendan, I'm a little bit unclear why the account with the smallest fee is the one that we're granted a new competitor turned up who's a little bit less expensive, but presumably for the more expensive ones, and they're the ones that are taking 1% of our money every year, there are lower cost alternatives to them. So why just this one?
Well, those are all active manager options. And so those fees, obviously they vary in range, but we do view them as very competitive given the spaces that they're in. I mean, certainly things like real estate are more expensive. Small cap or international can be more expensive, but given those spaces, we think those fees are appropriate. The reason we're bringing this one to you is we really view the index exposure kind of like a commodity. You're getting the index either way, and so really fee is the only differentiating factor. Where in these other portfolios there are a lot more factors involved in that decision. And so again, if we were in other index exposure in some of these other asset classes, this would absolutely be a topic there. But just given the fact that those are actively managed portfolios, it's a little bit of a different discussion.
Yeah, I get it. With the other ones, we'd want to compare, WCM has taken 1%, Euro Pacific has taken 0.5%, but maybe WCM is outperforming Euro Pacific by 1% consistently. Whereas with the index funds, they're investing in the same. Yeah, got it.
Correct.
Is there any penalty or any other charge for the switch?
There would be no penalty or charge. Your custodian is able to do what's known as a same-day transaction or an exchange. So you're never out of the market. It would just be kind of a bookkeeping switch at the end of the day. So you just go from the one fund into the other. From that standpoint, there really is no cost other than you're just now in the fund that's paying a lesser fee. The only other consideration and a question we're getting a lot is Vanguard going to change their fee now that they're no longer the low cost provider? We've tried to reach out to Vanguard, have not really gotten anywhere. So my sense is that they have no plans to do it, at least as of today. But if they were to see a great reduction in assets down the line, it certainly would not surprise me to see them match, if not even come back and beat the Fidelity fee. And if that happens, we can obviously reevaluate and potentially even switch back if that's the case. But at least for now, since we don't know that that's going to happen, why not take the lower fee?
Well, and conversely, wouldn't Fidelity, once they start seeing some growth in this area, since they're new to it, probably raise their fees at some point? I mean, if there's no reason we can't just keep switching back and forth, then I guess it doesn't matter. But
right, yeah, that's the thing. I mean, I would think it unlikely that they would raise the fees, just given if you look back 15 years ago where index funds were, they were 20, 25 basis points, and it's a steady line heading towards zero. I'm not sure it'll ever get to zero, but we're down to 2 basis points. It's getting awfully close, but it wouldn't surprise me if somebody came out a year or two from now at 1 basis point or something like that. But those fees are getting lower and lower as more and more dollars, quite frankly, are being passively managed. And again, it's a very competitive market. There's no it's really a computer that's able to handle the portfolio. They don't have to pay a huge staff to pick stocks. They're just replicating the index.
This is Dupree. I have a question.
Sure.
On this page 9, our total fund fee is about 46 basis points. Is that in line with other pension plans? Is that high or low overall? Can you answer that?
Sure. It's very much in line. Now, one of the questions that pops up is kind of based on your allocation. You know, there are some funds that have significantly more passive exposure. So you might see their fee closer to 25 or 30 basis points. But there are plenty of other plans that are closer to 65 or 70 on average. So I'd say you're kind of right in the middle ground, but fairly low considering your amount of passive exposure. You have a relatively small passive allocation, so paying a total average of 46 basis points with a relatively small amount of passive exposure, I think is quite good.
Any other questions? So let's take the approval of the September 30th, 2020 quarterly investment performance report first. So I think we do that with a roll call. So can I get a motion from the police board to
Dupree
approve?
makes the motion.
And is there a second?
Second.
Thank you. Any discussion from the police board? Roll call?
David Cohill,
Yes.
Marvin Dupree,
Approved.
Jason Sharp.
Yes.
Firefighters, same motion.
I'll make a motion. Pavlovsky.
Is there a second?
Dawson, second.
Any discussion? Roll call?
Gaylord Candler,
Yes.
Ed Dawson,
Yes.
Dennis Pavlovsky,
Yes.
Debbie White.
Yes.
And the same motion for the general employees board.
Motion Dumont.
Is there a second?
Curry.
Any discussion? Roll call?
Christine Hoffman,
Yes.
Nick Curry,
Yes.
Georgette Dumont,
Yes.
Brandon Maresma,
Yes.
Eddie Vergara.
Okay. All three boards approved the quarterly investment performance
Yes.
report. Oh, thank you, Eddie. And the next item is to approve the recommendation to transition from Vanguard Total Stock Index Fund to the Fidelity Total Market Index Fund. Can we get a motion from the firefighter board?
Motion Pavlovsky.
Is there a second?
Dawson, second.
Any discussion on this item from the firefighter board? Roll call?
Gaylord Candler,
Yes.
Ed Dawson,
Yes.
Dennis Pavlovsky,
Yes.
Debbie White.
Yes.
Same motion, police board.
Motion Cohill.
Is there a second?
Dupree, I'll second.
Thank you. Any discussion? Roll call?
David Cohill,
Yes.
Marvin Dupree,
Yes.
Jason Sharp.
Yes.
And the same motion for the general employee board.
Motion Dumont.
Is there a second?
Second, Brandon.
Thank you. Any discussion? Roll call, general employee board.
Nick Curry,
Yes.
Georgette Dumont,
Yes.
Christine Hoffman,
Yes.
Brandon Maresma,
Yes.
Eddie Vergara.
Yes.
Okay. All three boards passed that item. So thank you, Brendan. And we will move on to our pension administrator report from Dustin.
All right, thank you. Brendan, did you have any comments on these last few slides here that you wanted to make?
Sorry, I'll just mention there's no action, but these are charts that you've seen before, and I just provided the updated chart as of the most recent month end for your review, so you can kind of see the scale of the drop back in February and March, and then of course the subsequent recovery. So just wanted to provide that additional information for your review.
Okay. All right, thank you. All right, moving forward here, before I forget, off the top, I'll mention it. Our meeting that will be coming up in February will be our next scheduled meeting, and we're not sure what the governor is going to do with extending these virtual meetings, things that may not be allowed at that point. So just wanted to mention that, to put it on you guys' radar that may be an in-person meeting. I will definitely be in communication with you about that. And that's kind of why we moved this meeting up, because we didn't know if it was going to get extended for November or not. And considering the number of board members we have for the pension boards, it's easier to do these virtual meetings. So that's why we moved it up to the end of October here instead of our normal November meeting dates. But moving into the report here, the normal reporting of these numbers, I'll kind of jump down and point out some things. We do have that difference that I pointed out last time for the general employees, the vested and non-vested. You can see year over year here. Now that the difference is 11. And again, that's still due to the same
size
thing.
of that? I
Yes.
can't read. Yeah, thank you.
Okay.
A little bit more, just so it goes to the page width. Beautiful. Thank you.
You're welcome. So a change of 11 year over year there, and that's because 10 years ago we still had just began hiring again from the slowdown where we had stopped hiring after the 2008-2009 financial crisis. So now those people that weren't getting hired there during that time period between 10 years ago of 2019, 2020. So that's why you see that big drop off there, but should expect to see that start ticking back up toward the 90s here in the next year or so. No big major changes on this part of the form. I will say this is usually one page, and I had to break it up into 2 pages because we had so many rollovers, refunds this year. I don't think there's too much to dive into that other than it just happened to be that this year during this calendar year, I think over $1 million pulled out just in the general fund between backdrop distribution payouts and people just pulling their money out. Some of that we talked about before was some of the general Beaches Energy people kind of getting picked up by Clay County and stuff like that. Those some of the larger numbers you see in there are those people that got kind of pulled away from the city. I guess that's more of a note for the city than the pension plan, but any questions over any of those numbers or anything? I mean, any comments? All right, we'll go back up to the report here. Again, no scheduled conferences to date. They are doing some virtual conferences, but we'll try and get some more information on that and see how. I want to dive into that more to see how good that's going to be before we spend the board's money on that. And congratulations to Eddie. I kind of mentioned before the meeting, for those that were in here, that Eddie won re-election for another 4-year term. He was sworn in before the meeting here, and glad we get to have another 4 years of Eddie. Before, it was mentioned that the board would like to know more information on some of the retirees, including I started including the service years on the people that were coming up for retirement, just some more general information. And I thought, at the end of a fiscal year, as we're wrapping everything up, it might be noteworthy to pass along the information of the retirees that passed away during the year, just because, some of these people may have been retired a long time. Maybe you knew them, maybe you didn't, but just wanted to pass the information along in case maybe someone passed away that you didn't know had passed away. Right now we have the next quarterly meeting scheduled for February 9th. Again, that's subject to change. We'll see what all is going on with COVID at that point. Definitely back in March, I did not think we would still be dealing with this at this point, but here we are. Meeting calendar is attached for 2021 here. And I know in the original agenda, I had failed to update some of these dates. So I've updated this and I sent a revised meeting calendar this morning. I think that's about it from me. I attached our information here on the trustees, and if anyone sees any information they would like updated as it pertains to you, please let me know on that. Any questions?
Okay. Is there any other business for the board today? Okay. Thank you guys for attending and actively participating. The meeting is adjourned.